This week is a busy week for earnings, as we'll see Facebook and Apple report later in the week. Joining me today is Keith Bliss from Katona & Company. So Keith, we saw earlier today McDonald's missed forecasts. How is sentiment going forward since this is a busy week for earnings?
Yeah, well, sentiment on the earnings picture for the second quarter has been staged, shall we say. We're expecting a tepid quarter. All the companies that have really signaled that, of all the S&P 500 companies that give some sort of guidance, the overwhelming majority of them, ever since first quarter earnings have ended, have been guiding lower. They knew it was going to be a weak quarter for lots of reasons, global macro issues, rising interest rates that have started to come into the picture. So we've been fairly tepid on what's going to happen inside of the earnings picture. As I've said before, though, what we really want to look at is top-line sales going forward. Companies of all sizes can manufacture the EPS number down to where they need to get it to satisfy the analysts. So that's why we really focus on top-line sales. And when you take a look at a global consumer company like McDonald's, if they're guiding lower and they're a little bit concerned about their growth, not only domestically, but where they get most of their sales internationally, it's cause for concern going forward. What you should be focused on is not only the housing data, but all the home builders start to report later in this week. So I would take them all together. The existing home sales is going to be volatile from month to month. We're still at all-time highs on a year-on-year basis, but here's the one thing to really caution on. The home data that we got today on existing home sales is really tracking sales that happened in the April to early May timeframe before the higher interest rates are starting to kick in. This is when you can still get a 30-year loan right around 4% or maybe a little bit below 4%. It's now kicking up. So I would take that one with a little bit of a grain of salt. When we take a look at new home sales, which we're going to get, as you pointed out, later this week, focus in on not only the level, but what are some of the noises that are coming out of the people that calculate that data. And then on Thursday and Friday, we get some of the larger home builders starting to report. Take all those together. I don't think they're going to paint a very good picture for housing actually going forward, and they're going to cite the spike up in the interest rates and the Fed's inability to control the longer end of the curve now. The market's taking over for them doing that, and it's going to hurt their business a little bit. Take a look at the home builders. We're going to start to get bearish on them soon. Steady as she goes on the durable goods orders is that, manufacturing has been one of those things that's been very frustrating to all the policymakers as well as the Fed, is that manufacturing is just not what it used to be back in the 70s and the 80s in this country. A lot of jobs have been shipped overseas for a variety of reasons. It would take too long to point out one specific reason. But the one thing that does give me a little bit of a positive feeling is last week's industrial production number was better than expected. The manufacturing component of the industrial production number was better than expected. So hopefully we'll see a pickup on this. But again, the manufacturing renaissance that the president likes to talk about that needs to happen in this country is going to be many years in the making. There are structural things that need to change back to the way they were, taxation issues, regulatory issues, you name it, before we're going to have these big durable goods orders month-on-month increases, which is what we all want to see. I don't expect it for this month either.